Good afternoon and welcome to the end of day review for today. And today is November 4, 2024, and it's a Monday, the first trading day of this week. And this week we have a huge impact news, which is the FOMC meeting come out on Thursday, 2 p.m. Eastern time right there. So that's the huge economic event that's going to impact the markets, huge impact the last quarter of this year. We are on Q3, right? Q4, last quarter of this year. Whether the Fed gonna cut more interest or hold it steady. Last time they cut 50 point right there. By the way, we are in week 45. 7 more weeks will close out this year. Yeah, we are here in this week. It gives us right here. We are right there. And Thursday, November 7th, we have a FOMC meeting, minutes release or the conference, and we will know. And then the following week, we're going to have a CPI data, which is also a very high impact news on November 13th, which is for on Wednesday, right here, Wednesday. All right, and today, there are two huge moves today. Yeah, today is the day before. Tomorrow is the election, presidential and congressional election here in the U.S. So it makes sense that today is kind of not moving much, right? It kind of in the range, the consolidation day. But still a huge move. Even the consolidation, but it's a huge move for today. So now let's go into the chart to see what we see today. So here's our recording, right? So you see the huge swing at 9:30. Yep. There's it come to our mind that we remember that this one single US swing at 9:30 and then it reversed. Yes, and we saw that phenomenon in here in November 30. See that's come to our mind when we see that, and it's a very low resistant liquidity run, right? It's just boom. That's coming to our mind. We thought, okay, so close out and then it's gonna be reversed. That is the first thing coming to our mind. But right here, before the 9:30, you can see that the 9:15 right here give us a short setup right there. As soon as we see this flip, we need to go in a short them because you see it tests from above twice at this level, at the 55.75 right there. Short them and we can, aim for this level. We're gonna have a huge run right there. It's 20 point right there. It moved from 55 to 38, 20 point. So 4R right away. We'll really be hesitant right there. That was how I missed the move. But one thing keep in mind that you see this at a 7 minute into the 9:30 candle, and let's see what happened next right here. Yeah, you see that is kind of pull back, right? You don't want to see that. So that gives us an idea that today is a very consolidated day, or the day that is, another word for that is a very high resistant liquidity run for today. So we need to be careful. Yeah, that is the one that signal tell us that it's not easy to trade. So we have to be careful. We have to be patient, and we have to side down. We have to keep our side very, very a small side, just one contract, and don't increase the size until we see that where the next strong liquidity. That's the huge lesson for today right there. It's not like October. You see that on uh, October October 30, which is a Wednesday. You see that? And we see the day before October, Tuesday, is a short setup right there. Test from above, and then boom, is going down. So right here is the very, very, you see that? Very smooth move. It's a very low. We put a note right there. It's very low. Very low resistant liquidity run right there. Just one single swing at 90 and it reverse, and the reverse is also very low resistant liquidity run right there, very smooth. So we thought that that's gonna be the case for today, but it did not. The reason why we thought it's going to be today, because we thought it's going to be because the day before that Friday is set up a long setup. Yeah, because you see that it's the long setup on the high time frame, which is the daily time frame on our right here. It's the weekly on our left. So you see that last night we took that last night or last evening in the at 21:19 hour right there, 19 minutes. So you see that it tests from below, and we thought that it's gonna be reverse from here, right? Break, test from below, and reverse. That is 4 breaks out type 1 reversal. Yeah, here's our bread and butter setup. We trade every day in and day out. So right there, we thought it gonna be, you see that? Break, test from below, and reverse. That we thought gonna be, reverse for type 1 on the daily time frame. Yeah, so with that in mind, we thought that it's gonna after the 9:30 right there, we thought that it's gonna be reverse from here. But we learned our lesson, right? You see that? Whenever you see like that, then it's telling us right away that today it's gonna be a very high resistant liquidity run right there. 9:30 is very important to tell us right there. It's not like it happened on October. Where's our October? Right here. See, October is the liquidity run is very smooth, very low resistance right there. But today at 9:30, it tells us a different story, the opposite story. Yeah, that's mean, you see that? Okay. So right here, we thought, wow, that means that, you see that level, break and test from below 1, 2, 3. So this is gonna be go up. That's fine. That's perfect. Let's see. Yeah, but it's you see that? So it's very right away the 9:30 tell us it's very high resistant liquidity run right there. So you should be careful. I think we did mess up a lot right here because we thought that, okay, it's gonna reverse, right? Because it tests from below. But look at this candle. It's not really a clean or smooth liquidity run at all. It's very resistant, high resistance liquidity run. We learned a huge lesson, but you see that? Yeah. Yes, you see that? It's really swing both ends right there. It's very high resistance liquidity run right there. Yep. And we said, wow, perfect right there, right? Test from below and reverse. So this one gonna be continue, but it's not easy. You see that it back and forth, very high resistant liquidity run for today. So we have to aim at the right target and get out. Yeah, I think we lost right here. So our job is have to identify when it will be a low resistance liquidity run. So we avoid the day that is very high resistance liquidity run, and we have to identify that. It's not easy, but it takes practice. You see that? Huge, right? And we thought that it's gonna break the level, but you see it pulled back right away. So we identified a range right there, and a certain head level. Now we look back, we see this guy. It's just a short setup. Basically, you have a Euro swing at 9:30, and you're gonna have reversal from here, or you have retracement and another expansion down right there. Two possibility. And today the second possibility is taking place right there, which is a second leg down. We also see this phenomenon on the other day. I think let's take a look what we have that. All right, here's it happened the other day at 9:30 also. You see that this is a one single Euro swing, and it also retraced back right there. But the candle for October 29 is so much different because it have a gap right here, a fill, and then it reversed from here. So basically we have two scenarios. We have expansion, then we're gonna have what? We're gonna have reversal, or gonna be a retracement, and then expansion. We have two possibilities, and the first possibility right here is very easy. You have expansion, and then you have reverse. But today the opposite happened. The second scenario happened, which is you have it's a very good case study right here. So you have expansion, and then you have retracement, not reversal. Here, that's the beauty right there. Yeah, let go slow right here so we on the same page. Very beautiful use case. You see that? So how do we know? How do we know that it's gonna be reverse or it's gonna be retracement and a next leg down? Well, look at the 9:30. Look at the 9:30. If the 9:30 test from above, not close below, then we know that it's gonna be a retracement and another expansion, or another word is for the next leg down. Look at that. You see right here, right? Right there. You remember at high time level, this got close below that level on October 29. All right, let's go back to the chart and see October 29th. That's a couple of days ago. Not bad. We can go back and revisit to see how, yeah, right here. Is that right? Yeah. You see that? It fill the gap. Is that right? Yeah, it fill the gap. So basically, where's our October 29? Is that right here? October 29. Yes, so right here. All right. So it fill the gap, but at the same time, you see that it's close below the high time frame level. So that tells us that the target's already hit, and when it's go back, then ready for the reversal. But today the opposite happened. I mean, if we go to the detail, we can see very clear. I mean, if you look at when you see that, you will never unseen. The idea is that you can see how they set up liquidity and how they draw on liquidity so beautifully. Yeah, here the screenshot we take right here. You see the 930, it did not break.
The markets are open.
It did not break the high time frame level, the 57, 55 right there. You see that? That tells us that it's gonna be a retracement and expansion. Yeah. If this guy close about here or below that level, then we know it's gonna be a reversal from here. Man, it's so beautiful. You see how the liquidity was set up right there? The only two possibility. And the market tell us which one it gonna take, right? Because right here you have a first leg down right here, right? You have expansion, retracement, and right here expansion. After this expansion, you have what? You have two possibilities. It's gonna be reversal or gonna be retracement. And then go to the very easy one is the reversal. How you know it's gonna be reversal? Then look at the 930. It's gonna break the high time frame level and close below that, which is happened on October 29. Right here. It's closed just below that level. See that? And I think we do have that right there. Is that below? Yeah, right there. It's below. Yeah, right below that level. Make sure that we match the date 29, October 29 right there. So what level we're looking at? Oh, 46. Okay, let's see what level we have right here. 50. Yeah, 50 is break. The 46 is still down here. It did not break 46, but the level 50 it break. So you see that? Yeah, so we have to rework this a little bit to make sure right here. Oh yeah, right there. We see that is break the 56. Yeah. This is the 30, the 29. I think we have to make sure that we are on the same page. Yeah, right here. On the 29, we have to make sure we draw the level 50. Yes, it break that, and then boom. Yeah, we need to fix this so it makes sure. You see that? Right? So that's the point we try to make right there. So basically, we see the huge US swing at 930. Then we have two possibilities. It's gonna be a retracement or it's gonna be a reversal. How about consolidation? Is there any way that we can say that it's gonna go to consolidation? No, because after the huge expansion, it's not gonna go to. It's not gonna go to. Normally, it's not gonna go to consolidation. I look at this price delivery theory. Yeah, here's how the price will deliver. Right? This is the theory that ICT cornered. So basically, after expansion, it either go to retracement or it go to reversal. It hardly go back to consolidation. Yep. So we only have two binary choice right there, and the market tell us which one are gonna go to. So that means we eliminate one possibility, then we know for sure it go to the other scenarios. Right? After expansion, we're gonna have two scenarios. You go to retracement or go to reversal. Yes, so right here you see that on 29 we have a high time frame, another level up here, which is a 50. So 930 broke the level and close below that level. That means a mission accomplished. Now it's gonna reverse. That give us a signal that it's gonna reverse. And look at the next candle. It responds very quick, and also is kind of engulfing the body of this candle. For today, we don't see that. You see it close below, and it still have a long wick down there. The long wick in the bottom, on the bottom long wick right there. Yeah, this one also have also. But anyway, based on time frame, we can see that. But for today, it tells you a very different story. It did not break the high time frame level right there. That means is tell you that the whole move right here is gonna be a retracement and then expansion down. It's not gonna reverse from here. So that is the key lesson we learned for today. We have to be very well versed on this, so we know where it's going to draw on liquidity. Otherwise, we will get crushed. Yeah, that's absolutely so true right there. So here's our analysis early in the day before, exactly at 8:12, right? So our idea that we see this huge down move, and this is that retracement, and you see the London is pretty much, consolidation, because actually the London is a retracement right here, right? Retracement to the downside, and this one retracement. Right after London, it go back up. So it pretty much, it depends on how we look. It can be a consolidation right here, or it's a retracement go into consolidation. So next move for us, we are gonna anticipate a expansion. Yeah, we anticipate is as a expansion right there. Because you go into consolidation, next move is gonna expansion. And it did. You see that if you look at the charts at 9:30, that exactly happened. You see the expansion to the downside. Yes. So right here, look at this analysis. We likely anticipate expansion, and it did expansion. Right, the huge expansion. And I think we did have a swing shot at this moment. Yes, so that right here. It's the expansion right there. Then the next move, this at 37, right? Then the next move, what gonna happen? It's gonna be reversal at 8:45, start at 9:45, or gonna be retracement and next leg down? Yes. So here's our right there. Here's our analysis right before that. So we have expansion, and then you have a retracement, and then it's going to be expansion. It didn't happen at 9:30. It's a expansion. See that? Yeah, let's write down our annotation right here. So it's the huge down move right here from Friday after 10:30 right there. So it's basically it's a expansion. And then right here we have the open, and then the Asian is a retracement. It's not a reversal, it's just a retracement. Retracement. And then the whole right here, the London. The London is you can call it consolidation, or you can call it retracement, right? You can call retracement. This one is gonna be a reversal, but we don't call this reversal. Then we call retracement. Then the here has to be called consolidation. And after the consolidation in this range, you see that, then looking for a expansion, and it did expansion right here. So we have expansion. So we have expansion. Expansion at 09:30. Huge expansion, right? Expansion, yeah. Then the next question for us is gonna be reversal or retracement after 9:30. After Judah swing, this is a one single swing over 9:30. Is that right? Yeah. We could, yeah, next leg down, right? It's a next leg down right there. So basically, a next leg down. Then right here we have a question. Is it gonna reverse after 9:30 or retracement after 9:30? That is the next question we have right here. So next it's gonna have two possible right here. After 09:30 expansion. Then we have two possibilities. The very obvious one is reversal, and the second one is gonna be retracement. And that the case, then it's gonna go to next Then it goes to expansion again, which is a neck leg down. Yep. So we have two possibilities right here. That's right, we have two possibilities right there. So we see huge expansion. Then the next question we ask is, after expansion, what's gonna happen? It's gonna be a reversal, or it's gonna be retracement, and then boom, the next leg down. Well, the market will tell us. Yeah, the next couple of candles, the market really tell us which direction it go. See that? The market tell us exactly how the candle formation and the next couple of candles tell exactly what they're gonna go. You see that? That it did not break, it did not close below this high time frame level. So it tells us that there's no, it not gonna reverse from here. It's a retracement and then boom, another leg down. If this guy closed below here, then we know the reversal is in place. Yeah, that's the huge lesson for it right there. You see? Yeah, it hit this level just a little bit and then alright, so here's our write-up so far for today related to the price delivery theory or model. So basically at 8:15 we see this setup. Basically we have a huge expansion move and then it's retracement, and then in the London it goes to kind of retracement right here, but it goes into consolidation right there, and then we anticipate a huge expansion around 9:30, and it did happen. So it did happen. So we see the huge expansion, the next leg down right there. Or in other words, it's one single swing at 09:30. And 7 minutes, that's the case. 7 minutes into the 9:30 candle. Then the next logic gonna be happen. So after expansion move, the first thing come into our mind is gonna be reversal. Right, you have expansion, then after expansion it goes to either retracement or reversal. But in this case we see the sweep liquidity from the Friday PM low right there. So the first thing come out of mind is going to be reversal. The second is retracement, which is going to make a retracement, and then boom, it will be the next leg down. So expansion move right there. All right, but here the interesting happen, the dynamics happen. So at after the 8:30, so 9:30, so it's the 9:45, the next candle right there. So basically the first scenario, the reversal is no longer valid, it's invalidates. There are two reasons right there. First, the very critical signal that the 9:30 is flipped. It flipped from a solid Dow close candle, like Dow close candle, it flipped to a long bottom wick Dow close. So basically it tells us that it tried to go down, but they're not enough buy side liquidity. That's the whole idea. So it needs to build up buy side liquidity, right? And then it's close above this key level 57, 55.75, really close above that. That means it not accomplished the down move yet. So it leaves there the signal tells us that it's gonna come back. It just needs to build up enough sell side liquidity. That's it. Then the only option for us is gonna be a retracement, and then it's gonna make another expansion down right there. And so we watch for the entry around this level, 75 and 57, 68, or this level also, the level low right here, so about 64 also. If we go to the next one, you can see, yeah, 64 right here, the low of this candle, so 64, 65 around that level. And we did see it right there, you see that level? So it's break and then it tests from above and it reverse. But the beauty is right here, it's very confused right here. We did lose a lot right here, because when you see this, right, it break, reverse, this one's supposed to reverse, but somehow the guy right here creep in right there, and it stopped us out, and it turned us into a long. We thought it's gonna be long. Yeah, that's sometimes the market is very tricky. You see right here. All right, so all right, we want to see, okay, yeah, all right, perfect, right? We see that low, and yes, so right here, you see that? So break and test from above and reverse, that's Taiwan reversal. So we thought, and it also tests from above, so it's gonna follow through. That's why we short them. But it make another move up, very confusing right here. So that's why. But as soon as we saw the next candle move down, we know that it's gonna short, and we did go in short right there. But sometimes just one candle is just anomaly right there. It come out of nowhere. That's candle at 11. Yeah, this candle is kind of outlier. It should not be there. 11 right there, very tricky right there. Otherwise, the whole setup is makes sense, right? Test, break, test from above, and reverse. This is the setup that we are trade right there. So break, test from above, and reverse. So this is the outlier, right? It's just exceptional. So sometimes we have to deal with this. Right? But if we put our stop loss wide up here, then we still weather through this this outlier exception right here. Then you have a nice trade right there. Yeah, so basically the whole idea right here, when we understand the price delivery theory or model, we can see that it does make a lot of sense why the market flip, and when the market flip, what signal it gives to us. If right here it closed solid like that, then the signal for us is gonna be a reversal. But if it turn into this, so it know that it's gonna be a retracement and make another leg down. Yep. All right, let's check to see the trade we took for today. Yeah, here's the first trade we took, right? So look right here, we thought that, go to here. I wonder if we record that. Or we record that moment? No, we didn't record that. So we did record on this channel, on this app. So Well, we just go with the momentum right there. Actually, we see that break test from below and reverse, so we thought we're gonna reverse and we're gonna go to that level. That's the reason when we go long. But the minute we entry is kind of flip on it right there, and yeah, it flip on it. Alright, after I flip on us, then we say right here, we go long again. Because we thought, you see that this is the 9:15 candle. We thought, oh wow, then we can go long. But you know what? We make mistake. This tells us that it's gonna go short. You see that? It tests from above. Yeah, at that moment, we meet right the market, the direction of the market right there. We meet right and we should go short. Yep, because the prior trade we go long, so we try to go long again. So that's the bias that we need to be aware of that, because we try to be right. That's the thing right there. Don't try to be right. If the market tell a different story, then we have to stay nimble, stay flexibility to switch instead of try to be right. So that's the huge lesson for us to learn. Okay, so boom, it takes that out. You see that? We should short them and we catch the huge move right there, but we try to be right. Okay, so as soon as we saw the flip, we get in, we try to go long. Okay, and what happened? Okay, we go long, and then when the candle flip, we add more. That's right. I mean, that's a good move. But here's the trick right here. What happened? All right, so when we see that, we'll get scared. You see that? You see the setup right there? So basically we test from, we saw test, this candle got flip right there, so we saw a test from above twice, so we are afraid that it's gonna come down. So 47, let's go to the chart. 47, is it come down 47? Not 47, not the low of this. 51. So if we don't chicken, we still in a trade. We should save right there. And 67, it's gonna hit 67. After this, it's gonna hit 67. Yes, it hits 67 actually. It's 68, right? 67. Yes, it hits 67. So if we stay in this trade, we will hit this target. But when it flips, we get chicken out. So that is kind of so-called high resistance liquidity run. So it's very tough. Yeah, you see that? We scare, we take a lot, and now we turn to short. Yes, and we go with a big side right away. So that's our mistake right there. So sometimes we have to back up a little bit and understand what is the market trying to do right here, instead of follow our impulse and lose patience and just check the trade, especially when we are losing. So we need to aware our trigger when we trade, so we can reduce the errors, the mistake we make. Yeah, you see that? So we lost 2 trades, 1 short, 1 trade. But if we are consistent with the first one, we are good shape. You see, remember this one, we stay there. We're gonna reach this target easily, but we make mistake. We back and forth, but when we back and forth, we go with big size. That's the reason why we take a huge loss. Okay, and we go along again right here. But I think if flip on over here, okay, then we get beautiful, right? You see that it's gonna go there. That's why we add side. but it flip on it again. Let's go to the next video. I think this one is we'll cut off. Yeah, so you see that it flip on. Yeah, we go long right here, and it didn't go our way. You see that it just flipped. Then we switch to short, and now we switch to long. You see that we thought, wow, it's gonna break here, because you see test from below, then it's gonna break. But keep in mind that we failed to read that it's just a retracement. It's gonna make a second leg down, because all start with the flip at 9:30, right? We do that analysis right here. When you see this 9:30 flip, then the only solution is gonna be a retracement and second leg down. So basically right here, it's gonna build up the sell side liquidity for the next huge neck leg down. But unfortunately for us at that moment, we not recognize this liquidity. You see that? Wow. We should take profits. I think the reason why we don't take profits over here, because we have a big loss, so we what? We want straight stay in the trade longer to get the get back the loss. That's why we put a stop loss. I mean the target right here is too high. You see that? It flip back. It's very nasty. You see that? And now we have to reach too short. All right, instead of take the profit 3,000, now we lost, and then we take to, well, we said, well, now we take to a long trade. But you see that it flipped on us, and look at that. And now we try to go long again, but we go long, and then it didn't go our way, and then short. But the minute we feel that it break down again, then we know that it's gonna be short. And I think we do a very good trade right here. Yes, we am exactly that level it hit. We good. And then let's see. Yes, we move all the way, because we know that when it break the level, it's gonna hit this down here, and it did. Yes, so beautiful. Yeah. So the last trade is the beautiful trade that it takes us for a while to see where the real move gonna make. The real move is right here. Before we realize that, we lose a bunch of right here. So the strategy for us is that, if we have our real account back, then just right here, just do practice account until we figure out what the real move the market gonna make. Then we can do the real trade right there. That's another way we can survive, or we can be successful. Okay, here's the trade we go long right here. You know why we go long right here? Because we know that it hit the high time frame liquidity, and it's just reject very quick, right? It pull back very quick. Look right here. The high time frame is, if you look, which is this level on the weekly level, 50 and 25. As soon as it hit that level, at first we thought it's gonna break through, but it did not. Then it gives us a very good signal to go long right away, and that's what we did. Look at the recording. We see when it moved down. You see that? Yes, right there. See that? Yeah, so right here, exactly at 12:10, which is 10 minutes into the candle at 12 right there. We see that hit level, and then we see a retrace very quick, the flip very quick. You see that? It flipped. So that's where we go long. we go long even before the next candle, which is 12:15 start. We go long right away, and beautifully. And we just aim for very low hanging fruit right there. Boom, it hit right away beautifully. You see that? From loss, 12,000, we get 2,000 right there. But yep. Well, if we don't take profits, we're gonna get back a huge right there. Wow. Here. All right. That's one more thing I want to show the other errors. I think after that trade, we should call it for the day and be happy. But we try to engage again. We don't know what that call, but it's kind of call it's greedy or just we have a feeling that whenever we win, right, we're going to get more, but at the same time we don't want to give it back, and that feeling really impact the way we make decision, and we're working on that right now. We have to expose that shadow in us so we can know how to manage them, and that's exactly happened right here. So after that trade, beautiful trade, we try to engage right here. Basically, we try to engage. So our idea that we know that it's gonna make another leg down. Yes, the way this kind of forming right there, it tells us that it's gonna going down. So we thought that okay, good. So gonna short right here. Well, let's see how it's play out. But if it flip back right away, and boom, it's just out. You see that? That's right there. And then we thought that what? After we try one side, but when we go to the short side, we increase to 10 right away. That's the huge mistake right there. The reason we do that because we just, we try so hard and we get a good, good profits right there, and we give back 200. We want to get back right away. That is the emotion that went through our mind or our body at that moment. That's the reason why we jump to a big side right there. Yes, that's the trigger for us right there. We need to improve this. And boom, we go back to 300. That's brutal right there. And now we feel weird. Why is that happening? So we just short them. And short them. Beautiful, right? Right here, you see it go back, hit target. Come on. So now go back to 3,000 something. We should call it a day. But it should follow through and break this level. But you look at the markets, it's very tricky. It didn't break through right away. Maybe that's not enough. Sell liquidity here. So that's why it retraced back. It built up more sell liquidity before it make a real move. And that's where it gives us all the trouble right here. Alright, so we chase right here, one go long, but the minute we go in, boom, we stop it out. You see that? Work so hard, and then now we get back easily and very fast. And that's where our frustrating coming. And we make more mistake right here, around here. So we long them, and then we turn to short them, and then both not working. See that? And now we try to short them, but it did not. Yeah, it worked out. Yeah, short them.
Order filled.
Yeah, it did not work out. And now we short them again. And look like it's very tricky. We go big side. That's the mistake. Yes, I think we a little bit feel like this gun is not follow through. So we take a quick profit on the long trade right here. That's perfect. That's a good decision. All right, now we go along. We thought, okay, it flipped right here, so we go along. Let's see if this trade would have. Yeah, we should not move there. Let's see. No, you see that the mid-tech we should not move. This guy is very tricky right there. It's just a setup for another giant move down. You see that? Yes. So we go along again because we thought it test from above, but it's not always right there. We have to pay attention to we short them, and then we feel like boom, a hit, and now we go for a bigger target, boom, hit that target, and that's it here. So here we learn the huge lesson for the liquidity run, and we should not engage when the market is almost to the closing hour, and not much movement. We should call it for that. All right, thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success coming our way. Day by day, little by little, we're getting better and better. Thank you and have a great night.